Welcome to this week's Forex forecast for the week ending April 7th, 2023. My name is Justin Bennett with Daily Price Action, and in today's forecast, we're going to talk about the DXY, the US dollar index, the euro, the pound, the dollar versus the yen, and also the Australian dollar. Now, before we get started, guys, if you have not signed up with Prime XBT, my new partner, be sure to do so. If you're here on YouTube, I will put a link in the description. If you're on the website, click on that free access link, and you'll see the referral link there. You are going to get up to a $7,000 trading bonus when you use promo code DPA. And also, if you deposit $500 or more, I will give you lifetime access to our Discord group. That's a trading group where I provide 2 videos every weekday, one on Forex, one on crypto, and also exclusive charts and insights in the market. We discuss various charts and trade setups throughout the day. I'm very active in there, and you can also see my trades in real time. So once again, see the link in the description, or if you're on the website, click on that free access link and you will see the link to Prime XBT on that page. Okay, so starting here with the DXY, the US dollar index, we were talking last week about 102.50. So this is the area that I've mentioned now for the past week or so on the website. And you can see where we did get a potential reclaim last week. Okay, so this area served as support, right? Resistance back here, and then support through this area. Now, we did get the close below on Thursday. However, Friday looks to have reclaimed that area. So it's going to depend on the first 24 hours of the week, because you guys know how I don't always trust Friday moves, especially considering that Friday was the end of the quarter. So what's going to be key for the DXY over the next 24 hours on Monday is going to be to stay above this area between 102.35 and 102.50. As long as it maintains above this area on a 4-hour and especially daily closing basis, I do think we could get that move up here toward the 103.50 yearly open. Now, alternatively, if we were to see the DXY close back below 102.35 and especially start to take out these lows, and particularly, okay, this trend line off of this low from back here, because you can see that this is where the DXY bounced last week. Okay, so if we see it start to take out this area down here, close below this, we're probably looking at a move down there toward the 101 to 101.30 area. And like I said, stay above this area between 102.35 and 102.50. And we probably see that move up here toward the 103.50 yearly open. So next up, we have the EURUSD, which I am still monitoring this ascending channel that dates back here to the October lows. So as of right now, the bottom of this channel is still quite a ways away from the current levels. However, it is still something I'm monitoring, because I think that if we were to, over the coming weeks, get a break below this level, then we could see a larger unwind towards some of these lows and potentially even lower. Now, last week was really interesting for the euro because we saw the market, okay, close above this 108.50 level on Thursday. So you can see that this was a key pivot back here for the euro. We got this area serving as resistance, and then resistance again, the close above on Thursday, and the close right back below on Friday. Furthermore, Friday's candle closed the day below Thursday's open. So technically, okay, this is a potential bearish engulfing candle. Now, it's a potential candle, okay, a potential sell signal, because we do need follow through on Monday. So the one thing that you need when you get a bearish engulfing candle like this is you need to close below this low from Friday. Okay, so if Monday were to close below that, anywhere down here, then it would confirm this as a bearish engulfing candle. And that would also open up the area right around 107.50. All right, so as of right now, this does look to be a failed breakout from the EURUSD, which could send the market lower. And you can even see too how this price action recently looks kind of similar to what we got back here. All right, so if you notice, this price action looks very similar to what we just got last week. All right, so you can see where we got back here, the EURUSD closed above this level. So it was resistance through here, closed above, closed back below, sell off. Over here, we had 108.50 serving as resistance. We got the close above, close back below, or what appears to be, and so that could trigger a sell off this week. Okay, so in that sense, this does appear to be a potential bearish fake out, but once again, we do need to see follow through on Monday. Alternatively, if the euro were to close back above 108.50, then that would negate this bearish scenario and open up the 109.30 area once again. So the pound last week looks to have potentially given us a bearish close on Friday. We'll have to see, like the EURUSD, we'll have to see how Monday opens and how it trades throughout the first 24 hours. But, all in all, we've been watching this larger range from the pound over the past couple of months. Okay, so we saw support right down here around 1.19. we saw the fake out, the bullish fake out down here. We got the close below, close back above, rally. And as of right now, Friday came very close to testing the top of this range right around 1.245, but didn't quite get there. However, if we look at the 4-hour time frame, you can see where the market did potentially close below this trend line. So once again, just like the Euro USD, we'll have to wait and see how the first 24 hours of the new week trades. If it does hold below this though, then we could see that move down here toward 1.228, potentially down there toward the mid-range at 1.22. Okay, so you can see how these levels on the daily time frame work out, where on Friday we did get the pound closing back below this pivot on the daily time frame. Okay, so you can see how it was resistance back here. We got the close above, close back below. Okay, so that does look relatively bearish going into the weekend, but once again, Friday moves can be deceiving. So it's going to take the first 24 hours of this week to really tell us if this is a confirmed breakdown or not. So I wrote about the dollar yen last week on the blog, and the idea there was a potential ascending channel that we have off of some of these lows. So you can see we got the retest down here, even a bullish pin bar off of this area around 130.70. This is a key level that I've mentioned for several months. And you can see we got a nice reaction from this area. Now, at the moment, the dollar yen is kind of struggling between this 132.65 and 132.90 area, which you can see going back here. This was resistance. We got the close above, support, broke below, resistance once again. Okay, so as of right now, the dollar yen is holding above 132.65 on a daily closing basis. However, it has failed to get above 132.90 as of now. So for the week ahead, and really for April, what I'm watching is a potential daily close above this 132.90 to open up 134.40 and potentially higher levels to start to complete this larger ascending channel. Alternatively, if we get the move down here into 130.70, close below this area, okay, break below this, then we're looking at lower targets like the 128 region. All right, but just to be clear though, if we were to get the dollar yen breaking back down here into this area, this is really a no trade area for me because it's way too range bound, way too choppy. I would prefer to either look for something up here above 132.90 or below this support down around 130.70. But just given this right here from the dollar yen, I would prefer to look for a bullish resolution right now from this consolidation, just because of the potential higher low that we have developing here. And lastly, we have the Australian dollar, which has been really all over the place for the past few weeks. In fact, all of March really was just consolidation. However, I'm still watching this ascending channel, which could turn out to be a bear flag, although we don't have confirmation just yet. So last week I mentioned how this area right around 67.25 is resistance for the Australian dollar. You can see, support back here, resistance, and then once again on Friday we got the retest and the sell-off. So if we look at this on the 4-hour time frame, you can see that even on the 4-hour, the market is respecting this channel to where if we get a close below this level down here, okay, that would be the trigger for me. So 4-hour and daily close below here, this becomes resistance. We're looking at 65.80 and potentially 65.25. And once again, 67.25 is going to be resistance. Daily close above that, we're looking at the top of this range around 67.80. Okay, so you can see on the daily time frame, these two levels below, how significant they are here for the Australian dollar. Okay, so if we get the break below this channel, again, that's the trigger. You can see support right down here at 65.80. We then have this area that was resistance back here for the Australian dollar, where it formed this inverse head and shoulders and then broke out. All right, so that's what I'm watching right now for the Australian dollar. Nothing really to do here right now while the pair is so sideways. But if we were to get that break below this level here, that's the trigger for the move lower. And once again, a daily close above this area around 67.25 opens up the top of this channel and these range highs right around 67.80. All right, so that's it for today's forecast. I hope it helped. If it did, be sure to subscribe to the channel, smash that like button, and also sign up with Prime XBT, where you can trade Forex, crypto, commodities, and indices. Use promo code DPA to get up to a $7,000 trading bonus and deposit $500 or more and get lifetime access to our Discord trading group. Have a great rest of the weekend and trade well out there next week.